Welcome back, people. So we kind of understood RSI. Now let's kind of jump on and understand what is simple moving average. What does this really average mean, right? And why is it called a simple moving average? And why is it called moving average? What is this average? And how to plot that and how to eventually use that. So let us kind of jump on. So first and foremost, average. We all know what average are, right? So this is a middle school, but nevertheless, let me kind of put it. So for example, I'll say height of people, right? So if there are population of 1, 2, 3, 4, 5, 6, 7 people, 7 people's heights are taken. Say their heights are say 5.5, 5.6, 4.3, 5.9, 6.3, then 6 feet, then 6.2. These are the various. So how do you calculate the average? You take the sum of all of this, right, and divide it by the total number of population, which is 7. Once you do that, you get the average. As simple as that. Now, for the same population, if I want to calculate a moving average, let's say I want to calculate the average of the last 10 days of temperature in your city at 12 in the afternoon. So every day 12 in the afternoon, say for last 5 days, let me take it as 5 days, 1, 2, 3, 4, 5 days, 1, 2, 3, 4, 5 days, the temperature, say it was 30 degree, 31, 32, 29 and 30 degree. So this is what it is. So now if I have to take average of this, I'll add these 5 days and divide it by 5. I get a number. Let's say that number is 29 for convenience sake. I'm not going to calculate that, but simply say it is 29. Now I want to calculate the moving average of this temperature for 5 continuous days. What does it mean? Now I get 6th day. Now on the same days, 6th day, 7th day, 8th day. Now when the 6th day comes, what I will do is I will let go of this first day. On the 6th day, say the temperature was 27. So now I will take these 5 days here, and then calculate the average. Maybe that is 27.5. Then next one more day. After that, I will leave the second day, right, and take from this to these days and calculate for these 5 days. Then after that, I leave one more day, calculate the 9th day, 10th day. I'll keep on adding as the days goes. I will leave one last year and take the next set of 5 days. So on and so forth. So it's a moving 5-day period. So that is called as moving average. Simple moving average. Same thing. We can do it for our charts, do it for the price. So now I want to see what is the closing price average for the last 10 days, last 5 days, last 20 days, and do it on a continuous basis. Now I can manually go and check, oh, this is the closing price here for every day, and whatever is the closing price, take that closing price, add that divided by 5, I will get it for 5 days. Then again previous day I can go down. Either I can do it manually and plot that. Every day I can keep on plotting it. It's like if I can kind of go here and I can keep on plotting in a chart, right? So here are the days, right? Say 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days, and here are the prices. So I can kind of plot one day. Today it closed here. The average of the previous 5 day, the average is here, and then this 5 set of days is here, and this set of is here, this set is here, this set is here, and so on and so forth. I keep getting something, right, and I kind of join that. Once I join that, I get a simple moving average curve. And now the price will be somewhere here, wherever the price is. candlesticks will be there. So on top of the candlesticks, we can plot this and kind of do it. So why do we need this simple moving average? So simple moving average smoothens the price. What does it mean to smoothen the price? Every day price simply goes up and comes down. There's a volatility happening every day. So to decide what the price can do in the future or where it can do, it is difficult, just looking at one day's price. But if I see last 10 days, 20 days, 30 days and find an average, I will know the behavior of the price, what it has done for the last 10 days, last 20 days. Once I understand that behavior, I can figure out what possibly it can do in the future. Like for example, if I ask someone, say for example, when I was growing up, I was asked, oh, what is your score in your studies? In your school. So I said, fine, in my final exam I got this, or in my midterm exam I got this. So they kind of ask you, okay, how did you do in the last 5 tests, in the last 5 classes? Or if I say 1 year I kind of did extremely well, second year I did very bad, so then they will get to know that average is very low. But consistently, if I have done well, my average is also high. If my average is high, I'm construed to be a better student. If the average is low, I'm construed to be not so better in studies. Like in sports, right? What is your average strike rate for a batsman in cricket, if you kind of do? How many goals you score in hockey? How many goals you score in football, so on and so forth. So they find out the average to see how the person behaves, how the person is doing, how is the performance. Similarly for the price also, when you plot that, it kind of help you. And one of the very, very commonly used period is 20 period moving average, simple moving average. Now how to plot that? Very, very simple. You don't have to do anything. It's already readily available in all charts. All you have to do is click on the moving average. By default, if you see here, by default you get it for 20 moving average. And choose a color, whichever color you want. I'll choose pink for now, and thickness of this. And say okay, and say okay. See here, you got the average line. Wherever the price is going, average is somewhere here. Sometimes it is below, sometimes the price is above, sometimes the price is below, sometimes price is touching it. So what does it mean when the price is above? What does it mean? So it's a study, it's an analysis. Accordingly, we can take decisions. So now you can put an average for any time period. 1 day, which means last 20 days average. If I go to weekly, it is the average of last 20 weeks. If I go to monthly, it is the average of last 20 months. That is what it says. So it kind of changes from every single time period what you put in. Similarly, if we go to much lower time frame, right? So now here, how do I put? Similarly, go to studies, right? I just click on moving average, okay, let me click that. Moving average, and by default here it comes to 20. I'll take 20, right? Simple and close. I will choose a color, maybe this blue. Done. See, now you have a moving average line. There is a candlestick, there is RSI, and there is moving average. This is 15 minutes. If I go to 1 minute, I get every minute's moving average. If I go to 30 minutes, I get every 30 minutes. If I go to 1 hour, I get every hours. So that way I can choose whatever I want. I can kind of look at the moving average. So like this, you can have various moving averages. This is 20 moving average. So we can even look at one more moving average and maybe 13-day moving average. And I can have even that simultaneously. Look at the 2 moving averages. So what does the story behind it is what is very important. Do I use multiple? Do I use one? Do I use, just one is also good enough, right? But what to do with that is very important. So this is how you put in a average. So averages, moving averages are some indicator which is plotted on top, right? So this kind of really helps us to understand the price behavior over the last few days or the few period, and it kind of smoothens the overall price. So this is what moving averages, mean, simple moving averages. Of course, there are exponential, of course, there are DMA, there are many things. We don't need to get into complex, right? The simpler you keep it, the better. So it is a overlay. We saw one overlay, which is simple moving average, and one oscillator, which is RSI. Those two are good enough for us to make tons of money in stock market, and we will learn much more about how to kind of do it, how to use these two and come up with various strategies, right from intraday to swing to positional, everything, so we learned candlesticks, we learned indicators, we learned charts, we learned time frame, we learned quite a bit of things, all of that in this particular section. So if you got simple moving average, type in the comment, got SMA. In the next video, I'll come and talk about our actions. See you in the next video. Bye-bye.